Welcome to the Tech Guys Who Invest podcast, where each week you will learn how to invest wisely and safely. On this show, you'll hear about lessons Adam and Kevin are learning on their investor journey, as well as insights from industry experts. Our vision is to educate, entertain, and bring tons of value to you. Welcome to our show.
Welcome to this episode of the Tech Guys Who Invest podcast, where we teach you to invest wisely and safely. As our regular listeners know, we're a couple of tech guys working in the tech industry who are investing in real estate assets to escape the rat race. Although we are real estate investors, we like to educate ourselves and our audience about many aspects of investing, including different asset classes. Today, we are excited to learn about oil investing by speaking with veteran oil investor Grant Norwood. As CEO of Norwood Energy Corp., Grant handles the day-to-day operations and evaluations of oil and gas prospects and minerals. Having successfully worked on projects in the Oklahoma Scoop and Stack basins, active areas all around Texas, as well as the Illinois Basin, Grant's specialty is recognizing opportunity hotspots in undiscovered areas of the country where they can operate significantly below what it costs the oil giants you're familiar with, such as Exxon or Chevron. Grant couples his expertise with the desire to help your everyday passive investor get involved in what is one of the most lucrative but inaccessible industries in the world, providing some participants with very attractive monthly returns. We hope you'll find this episode as interesting, informative, and exciting as we do. Hey everybody, we're super excited to have Grant Norwood on the Tech Guys Who Invest to talk about oil investing. Grant, welcome to the show.
Adam, Kevin, thank you guys for having me.
We are excited to learn more about oil and oil investing. And the first question we want to ask is, how do people invest in oil? I don't know. I'm curious to know how that works.
I guess you could invest in companies if you wanted to go to the stock market. Those are options. There's mineral rights, there's overrides, which is owning a piece of a lease that you don't actually participate in the drilling. And then there's directly investing in drilling operations. So for me, I prefer directly investing in drilling operations. I don't want to rely on the success of a public company, or I guess people's opinions about that company. Minerals are good, but they're more generational assets. So, you may not get wells drilled on your property in your lifetime, but you pass them on to your children and they do really well for them. I mean, there's people all over West Texas that didn't see a rig on their property for 100 years, and now they wonder if the rigs will ever leave. So there's options.
Okay.
That's interesting. Yeah, super interesting with the different options there. And if somebody wants to invest in the rigs and operations, like you mentioned, how does that work?
Well, there's a few different structures. I mean, it all starts with a prospect that's usually generated by a geologist. A company will, they'll have some admiration for it. They'll pick it up and they'll either put a private placement together. They may be internally funded or private equity backed, and they'll go through with it and drill the well and hope for good success with it.
So each operation is almost like the equivalent would be buying a multifamily property. It'd be, you're looking at this, potentially drilling this. So you raise money for that specific drilling operation. That's completed. You move on to the next one. Is that right?
Yeah, you could say that. Or let's say you move in and just buy a lot on a street where there's already homes built and you just plan to build one home, or you're looking at a, bigger piece of property that you want to put a neighborhood on, or you get in the multifamily. So like I've got an analogy for each one of those. You could go into an old field and farm out a location because you believe it'll produce X amount of barrels and make you X amount of dollars, and you can get it done for, Y. And that's where you think you'll find the best returns on your money. You could go in, pick up a lease around other fields, and you've got room to drill multiple wells. So there's plenty of options, and you can relate it to real estate pretty easly.
Yeah.
Okay.
It feels like I'm starting to see some of the parallels there to the two types of investing. One thing I think there's a misconception on is that oil is for the wealthy. What would you say about that? And are there other misconceptions about oil investing that you can think of?
I mean, I guess you could look at oil guys and go, oh, that guy's got a lot of money. I could never participate on his level or be in his shoes. And, to some extent, that's probably true, but it's, there's all different sizes of investments. Even the big guys don't take on a whole project by themselves. You've got $100 million, couple $1 billion companies. They bring partners in, and then those partners might further divide the interest from there. It really just depends on their goals. But I guess you could kind of make the generalization that it is for them, but I'm here to tell you it's not. I mean, you could get started with a very small amount of money. I mean, you probably have to go through a set of questionnaires, but there's energynet.com. And I mean, I've seen interest go for $20. I'm not saying I'd want to own them, but they're there. You can. And, everyone's got to start somewhere.
Okay. That's comforting to know that anybody can do it. And that being said, how did you get into oil investing? It doesn't seem like it's intuitive, or you look at a property, you say, oh, I can be a landlord, or you see this apartment complex and, oh, I can own that, right? Oil you just don't think that, oh, I can invest in this.
Yeah. So I guess how I got started, I dated a girl in high school and her dad was in the business, and we were just talking about stocks and stuff. And I bought into a few public companies, traded those for some years, bought into some pipeline stocks, forgot I owned them, remembered I owned them a little while later and saw how well they did. And I happened to be at lunch with a few friends, and there's a guy I didn't know. And, for whatever reason, we got on the topic of stocks. So I was just talking about how great these pipeline stocks I own had done, because they were giving off 7 to 9% yield. A few of them had doubled and then split, and then were on their way to doubling again. So he said, well, if you like what your pipelines are doing, then, you need to check out mineral rights. They return 20% a year, and then, the speculative value goes up and yada, yada, yada. And I was like, So I got to studying and I got that guy's number, and I was probably a thorn in his side for a long time, but, he recommended a lot of good reads. We had a lot of long discussions for weeks, turned into months, turned into years, turned into, okay, fine, I'll sell you a deal. I think you know enough to where I'm comfortable with selling you a deal, and you actually owning interest yourself. And, I was able to do well enough for myself with my own funds, which really weren't that much, that I felt like I could start bringing people in after I kind of scaled up and really grew.
Okay. All right. Thank you for sharing that. So it's almost like happenstance that it worked out, but then you doubled down, decided to learn more. And I think that is the key. You said, oh, this may interest you. You started to really dive into the knowledge of it. And speaking of that, what would you say are some of those books that you read? If somebody hears this and says, oh, actually, I want to learn more, what would you recommend for them?
Well, if you're only going to read one book, I'd say Money in the Ground by John Orban. You can learn quite a bit from that book. If you read quick, you'll probably read it in a day. If you read slow, you probably read it in a week. Penwell is a publisher for the industry. And depending on what part of the industry you're interested in, they've got a whole, wide variety to choose from. So that's probably where I'd start on the reading.
So
Okay.
Grant, it sounds like you kind of started somewhere with almost sounds like paper, and then you moved into a more advanced or a more sophisticated form of investing in it, which sounds like with mineral rights.
You're 100% correct. And, owning minerals feels like owning paper, because you really just own a deed to something you can't touch, and sometimes it feels like you own nothing. And then you start getting letters in the mail for companies wanting to lease your minerals, and there's lease bonus offers. They're offering you different royalty rates. The next thing you know, you're getting letters in the mail for permits on your property. And pretty soon, you see that those wells got drilled, and you start getting revenue in the mail, and you're like, oh, this is kind of cool. And you start figuring up your returns, and you start growing your acreage position. And next thing you know, you're in business, and, you might only own minerals, but, you're still in the oil business. That's who's writing your checks. You're getting the same check from the pipeline companies that the operator's getting. It's just a different name on the interest.
Now, is this the same thing as investing in exploration?
So yeah, exploration. Exploration, it's kind of a interchangeable term. Anytime you're drilling any well, it doesn't matter how certain you are, they're still going to classify it as exploration, but exploration to most people might mean something that's a little less certain, because you move from exploratory wells to proven undeveloped to proven probable. You have all these different classifications that kind of come from the likelihood of you finding exactly what you're looking for. So it's all exploration. It's all E&P. You see E&P all over the place whenever they're relating it to oil and gas. But yeah, it's always going to carry the term exploration. And there's just different categories within that term.
So when you have a PPM that you're offering, that you're sponsoring, is that something where the oil's there and then it's the operation of getting that out of the ground and selling it, or is it some of going?
I guess for the most part, you do know it's there, and then getting it out of the ground and selling it might be a challenge for some. And I'm not saying it'll never be a challenge for us, but for the most part, I mean, you're not drilling there to find nothing. And that's kind of vague too. If we've drilled 50 wells in an area and we're right within the same stratigraphic region, we're pretty certain it's there. Is it beyond the realm of possibility that it's not there? No, I mean, it's possible it's not there. But for the most part, yeah, you're pretty certain. I mean, they kind of refer to it as wildcatting if you just go on a whim. And sometimes those whims come with years and years of research, because the first well in an area was off that same whim. So there's great rewards if you take those risks. I try not to. I don't like taking it on the chin.
Fair.
There's two of us.
Speaking of risks, what would you say the risks are of oil investing?
The risks are that you drill a well and there's nothing when you get down there. And the risks are also mechanical. I guess you could get down there. Some operators try to poor boy operations, use old equipment, and they get down there and it doesn't work. And you might be 2 miles under the surface going, oh, shoot, what do I do now? It's stuck, or, oh no, it's not going to hold up, or, it's, what do I do? And we never poor boy anything for that reason. I've seen too many horror stories and just not going to get caught with my pants down like that.
Yeah, man,
Fair
this
enough.
is so cool because it's new to me. Like the terminology you're using is that I'm sure you use with other buddies in the industry, and being a real estate guy, it's pretty new to me. I don't know, I'm just really enjoying learning a little bit here about oil investing. It's kind of cool. How do you see oil investing changing with the push towards clean, renewable energy?
Changing? I don't see it changing. They've been pushing renewable energy for 35 years now, and they've thrown hundreds of billions of dollars at it, and it makes up 3% of the energy mix. And the thing is, yeah, we're producing energy, but I mean, there's paint on your walls. There's glass in your windows. There's, rubber on your tires, even if it's a Tesla. It's we use it for so much more than transportation. You can take every car and truck off the road. You're going to demand about 15%. And that's just here in the United States. So I don't see it changing a whole lot. Maybe they double down on it and get it to 10%. I hope they do. There's a third of the world with no power. We have so many luxuries over here that they don't have in other parts of the world. And then there's another third of the world that doesn't have enough power. And then there's us, and we have all we need. But for the rest of the world to catch up, we're going to need an all-in energy strategy. This isn't a limited resource. So I have no problem if people want to try to perfect those methods. I don't think they're efficient enough yet. They've got a long way to go. A lot of their mining methods, disposal methods, their lifespan of the products themselves, they're just not there yet, and they're no safer or cleaner than what I'm doing, so I hope they improve, we need them.
Absolutely.
That's good.
That's a very good way of looking at it. I wasn't aware of the statistics overall. And then when you brought up the point of oil is used for a variety of things, it's you don't really think about it, but it makes a ton of sense as to, it's like, oh yeah, so it will be around for a while, even if we, like you said, double down on clean energy. When we talk about these investments, just generally speaking, how they work, I know you can't really give specifics. It's my understanding. Don't want to get you in trouble with the SEC or anything. What would be minimum investment amounts, maybe average terms, just ranges that could help us understand whether it's $100 versus $10,000 kind of thing?
Yeah, I mean, 10,000 is about where I keep the minimum on most projects. It's usually broken down by units or percentage points, and those are always going to be higher than 10,000. But I try to make it available for someone to dip their toe in just to see if it's for them and if they like it. Can't really expect somebody that, hasn't done a whole lot of research or doesn't come from that kind of background. I always recommend that book to any and everybody. It's just a great read when I'm explaining to you things along the way. If you choose to invest after you have, and as the whole process is taking place, you'll be able to understand me better. But yeah, I mean, money goes in, operations get funded, drilling takes place, oil gets found, well goes into sales, purchaser buys the oil, and we distribute revenue. It's as simple as that, and then we always put together an exit strategy. I'm sure in real estate, you guys don't plan to hold these homes, in perpetuity. Homes, properties, multifamilies, whatever it is in the real estate industry that you're messing with at the time. A sound exit strategy is always the best. I don't want to be plugging these wells 20 years from now. So I'm probably going to sell them 5 years into it. And usually you can walk away with as much as you would if you held it and still lay off the liabilities if you have a good exit strategy. There's so many yield buyers out there. And then when you speed up the time value of money, you can put bigger dollars into another project because you've got a multiple on your money, and you just keep growing and growing and growing. And that's why I said, you don't have to be a rich guy to do it. If you have these 5-year turnarounds and you make 4 or 5x on a project in 5 years, you turn around and what was 10 grand's now 50 now 250 now $1.5 million, $1.5 million now, $6 million. It's like, no wonder that guy I met in high school 60 years later, is doing all right. He was smart with his money. He found, a decent operator and drilled some wells with him.
Nice.
Now it doesn't always go that well, but for the most part, the opportunities are out there. And if you're with good people that are doing good work and you have some staying power, even if every one of them doesn't pan out, you're going to be happy with the results.
So Grant, what due diligence should a passive investor perform when considering one of these investments? Let's say one of our listeners is interested in investing in a share of this, but it's new to them. Now, you did mention the book. Is there anything else that they should do, like on an operator like yourself?
Mm-hmm. So, I mean, everyone's going to have their own set of concerns. Some of them are going to read the book and they're going to wonder if you've done this, and this geologically to make sure it's a sound prospect. Some people are worried about you specifically. Are you a good person? Someone's going to want to know what's your management style like. Are you financially capable of taking on the liabilities, and are you going to run out of money trying to complete the project? There's just different things that concern different people. I like to get references. I'm fortunate enough to be in the industry. So if I'm not drilling something myself and I'm considering drilling something with someone else, I usually can, find someone who's done something with them and will give me a good idea about who I'm dealing with. But yeah, if you ask for references, they're happy to provide them. You can question them and, whatever you need to feel comfortable. That's what I would do. And at the end of the day, you're going to have to take some kind of leap of faith. Hopefully it's not a learning experience and you do enough homework and find out enough about them that it's positive. Because you want the only risk when you deal with a company to be geological. You don't want it to be mechanical. You don't want it to be human error. You don't want it to be bad intentions. You just want to know that everything was done right. You had a fair shake. And, for the most part, I would say in this day and age, there's no reason to wildcat. You can get into older fields. Some people take older wells that might be making 20, 30 barrels a day, try to clean them out, get them to 40, 50 barrels a day. That takes a well that might yield you 40, 50% a year on up to 60, 70% a year. There's a lot of things you can do to mitigate risk. It's going to sacrifice a little bit of the returns, but at the end of the day, it's all up to that individual.
I kind of feel like if I were an oil investor and not a real estate investor, and I knew about oil investing, I would say that comment you made about you only want your risk to be geological was one that people should pay attention to. I mean, like when you said that, something inside me said, I bet that's really awesome advice. If I were an oil investor, I would know that and say, pay attention to that, people. But
right,
it's funny because that just kind of makes sense to me, what you said there.
Mm-hmm. Definitely. I mean, I think it comes loud and clear, and, I stand by that.
Well, awesome. Thank you for that. And it sounds like really when it comes to oil investing, a team is hugely important. Where do these oil investors, active investors like you typically hang out? I'm assuming you're not out there on the oil field or, I was just curious where you can find that. Because if you go to a local RIA, you can find everybody that does flips or oil sales or something along those lines. But you're the first person virtually or in person that I've met that invests in oil.
I got you. Well, I came to be in contact with Adam through a friend of mine, Spencer, and Spencer linked me and Adam up. We talked about this show by us talking about a real estate thing. So how people get to know each other, it's just like I wound up sitting across from a guy who'd been in the business for 30 years at a lunch one day. It just kind of happens to play out like that. But luckily enough, I got to be on your show. Maybe somebody will hear it, take an interest, and that'll get them started. And maybe they introduce it to a few more people. This is an industry of, at least 8 million people work in this industry in the United States. So it's not hard to find your way here, to find good management team, who's good, who's not. That's a tough question. I even had trouble finding that when I first started, but doing it for a few years, had a contact in Canada, set me up with a guy in Colorado, and we've drilled some really good wells in the past few years. And I don't know, I've just been fortunate, and it would be more than I could squeeze into this show if we really wanted to get down to how to search and what to look for. But shoot, because I've got access to a lot of databases. So I just kind of track operators' performance, especially when I was in minerals, because you're buying, hoping someone comes to drill on you. So you're like, how do I figure out where they're drilling next and what kind of well would be drilled on the property and what would it produce if I bought minerals here, So like I said, it'd take a long time to explain everything, but you can do a lot of research online. It goes right back to references. Somebody that's done something with them can tell you exactly what you're going to experience with that person.
Yeah, and it's not totally different in real estate.
Yeah, right. It does. Thank you.
Yeah, a lot of the same things you're saying all feel very familiar. The networking. How do we build a great team? And we find people, and it's just through networking and a common interest, a common focus. And I'm sure if we lived in a oil producing state or a state where the industry was more prevalent, there are probably a lot more people focused on that. So it's probably easier to find. So. Yeah, it's super interesting.
Yeah. Luckily, by the time somebody gets to me and I'm doing with something with, an operator or whatever, I've gone through it a few times with them, so I'm not going to stick around. If it didn't work out for me, then I'm not going to recommend it for someone else.
Sure. Makes sense. Well, Grant, we wouldn't be the tech guys who invest if we didn't ask you some kind of tech question. So
okay.
It's Do you drive a Tesla? No, that's not the question.
No, and I'm not against it. I mean, it takes over 100 barrels to make one. So
Nice. That's a good little stat. I like it.
Yeah, that's interesting.
That is pretty cool.
Maintaining's another story, but we'll just start with building.
So Grant, I'd like to ask you, what's a piece of technology that is missing in the oil investing space, or maybe, a piece of technology that, or some kind of innovation that you think would help the oil investing space or something like that?
Well, I'm not going to say that everyone's thought of all of them, but I have people walk through my doors 2 or 3 times a week saying, I tweaked this, I made that better. The sand that gets dropped off at these frac sites, I had somebody come in today told me that they have this new mechanism that goes on the trailers that instead of a 30-minute offload time, now it's 10. I mean, they're always changing something. There's just so many innovative things on the chemical side, the fracking side. They're always changing it. But I guess if you're just an investor, what I'm trying to do, I went around and made some kind of play investments with a few different companies to kind of see how they updated their partners, just so I could get an idea of what other people were doing and what would make people happy. So, I got a MailChimp account and I try to give weekly updates. Sometimes I send them every day. I hope people don't get driven crazy by them, but I try to give the play-by-play because I'm passionate about it. And just in case they want to be too, they've got the option. But I'm trying to move to an app right now. So they'd have a live feed on the rig, live feed on the production, kind of, as we sell loads every day, they can know how much was metered and just kind of feel more a part of it. I think that's missing. So much of it's old school where, somebody, you send in your agreement, you get your ownership back, and they call you in a couple of months, tell you what kind of well was made, and then you just see a statement every month. I try to go a step past that. And I think an app's the next step for me.
That's awesome.
That is cool.
All right. Well, Grant, it's been such a pleasure to have you on. I know I've learned a lot, and it's got the gears lubricated, if you will. Sorry, dad joke. But where can people find you if they wanted to learn more about oil?
I mean, my website's a great place. Got Instagram, got Facebook. I do these podcasts like this. I enjoy those. Send me an email, give me a call. If I can't get to you right away, I'll try to within an hour. I've got 6 different people to delegate over to you, and then they'll eventually bring you to me. But yeah, I'm pretty accessible on the internet.
Perfect. We'll put all of that in the show notes. Again, thank you so much for your time, Grant. Learned a lot, got excited about oil, and it was a pleasure having you on.
Thanks, Kevin. Thanks, Adam.
Thank you so much for listening to this week's episode. Be sure to subscribe to the podcast for the latest episode updates and to receive investor insights to help you invest wisely and safely. You can join the TGWI Insiders community at tgwipodcast.com/subscribe. Don't forget to leave us a review on Apple Podcasts. The feedback helps us grow and helps us give you the best investing content out there. For a step-by-step guide on how to leave a review, head over to tgwipodcast.com/review. And lastly, we'd love to connect with you. The best way to reach us is by sending us an email at techguyswhoinvest@gmail.com.